Welcome to this Killik Explains finance video. This week, 7 rules for tax-effective investing. Now, before we start, you must see tax in context. Don't let the tax tail wag the investment dog. Ho ho, what do I mean by that? What I mean is get the strategy in place first. So make sure your rainy day fund is in place, 3 to 6 months of cash to cover an emergency like losing your job or a leaky roof. Think about how you're going to generate the lifetime savings you'll need to retire and or fund long-term care. And then in the middle, you'll have a series of predictable cash requirements. They could be anything like sabbatical, educating children, paying off the mortgage, and you need a strategy for that. Well, once you've got that in place, then yes, look at the most tax-efficient way of achieving your goals, but do it that way around. So what are some tax-efficient ideas? In very much a summary form here, take full advantage of annual reliefs and allowances, and there are lots more of them than there used to be. So we've got a personal income tax allowance of £11,000. You've got a tax-free interest allowance of £1,000. You've got a tax-free dividend allowance of £5,000 and a capital gains tax allowance of £11,100. Why not try and use all of them as often as you can? Number 2, take advantage of the fact that income tax and capital gains tax, when you sell things for a profit, are at different rates. So for example, the basic rate of income tax is 20%, the higher rate is 40%, and the additional rate is a fairly painful 45% if your income puts you up in that kind of area. Whereas capital gains tax on stuff that isn't a second property basically is at 10% or 20%. And if it is a second property you're talking about, those rates move to 18 and 28. So there is some benefit where you can in planning to make sure you are hit, if possible, by capital gains tax rates rather than income tax rates. And there are things you can do to achieve that. Number 3, make full use of tax-effective wrappers. It makes sense to save tax effectively. So ISAs are very flexible these days. Why not have an individual savings account? Think about a junior ISA for your children as well. Number 2, pensions. I put SIPs, but personal pensions make a huge amount of sense once you've used up your ISA allowance, I'd argue. And then for people who've got enough money to tuck away, things like enterprise investment schemes and venture capital trusts are yet another potentially tax-effective vehicle if you're prepared to take a bit more investment risk. There's rule number 3. Rule number 4, invest as much as you can, as tax-effectively as you can, when your taxable income is highest. This is common sense. So for example, if you're paying into a pension of some sort, could be you, could be your employer, and you'll get tax relief from the government, make sure you're doing that tax effectively, and that means when your income is high. And if you're doing something called salary sacrifice, that's incredibly tax effective as an employee, as a way of basically reducing the amount of tax you're going to pay. So think about that one. Rule number 5, draw income down and sell investments when your taxable income is lowest. Again, common sense, but you need to plan for this. So get as much relief on the way in as you can before the government changes the rules, if they ever do. And then make sure, ideally, you're paying a lower rate of income tax on the way out. And all of these things just need to be looked at, reviewed and planned for. Number 6, if you're married or in a civil partnership, don't forget a lot of the stuff I've talked about you get twice. Personal allowance for income tax, 1 each. Capital gains tax allowance, 1 each, and so on. And ISA allowances, 1 each, and so it goes on. So as a couple, think about how you can as a unit act in a tax efficient way. And finally, keep an eye on the rules. The government keeps changing them. So recently we've had changes to the state pension, changes to the rules on pensions, changes to the rules on interest income, dividend income, and so it goes on. Keep an eye on that space. Any questions on what is a very broad topic, editor@killik.com, and to see related videos, killikexplains.com.